Alright. We are on video 4, numero 4 of the 5 video series explaining my entire strategy. So the past 3 videos have pretty much gone over, okay, what do you look for in order to enter a trade? And this video is going to be pretty much going over like conditions on when to not enter a trade, because obviously everybody can take a winning trade, but if you don't know the losing trades and what those losing conditions look like, then you'll never be able to trade this system profitably, right? So, this video is going over conditions, pretty much just explaining things that I look out for and pretty much conditions that you need to look out for in order to execute or not execute the market. So, let me just go over the list first and foremost. So, first thing is drawn liquidity. Like I've said this previously, if you do not have a strong drawn liquidity, there's no point of even trading, right? So drawn liquidity is the most important thing. So if you have no drawn liquidity, then there's no reason why you should be looking for a trade. Numero dos is low volume in the markets, right? Like as you've seen, kind of like obviously I didn't post yesterday because of Christmas, and you might have seen in the past few days we have overall lower volume in the markets. And what does this indicate? It is indicating just lower probability conditions, right? So as a continuation trader, you are essentially banking off volume to a draw, right? Because your entry model is volume after a retracement of price. And if we obviously don't have volume in the markets, then it's very hard to gauge whether if it's like whether we're putting in that retrace now or like it's very hard to gauge and get an entry when we are obviously not playing with a lot of volume within the markets, right? So low volume days are always going to be less probable, so that is number 2. Number 3 is ranging, and this is literally a perfect example of a range in live time, right? You see, boom, we take out session highs, boom, we take out session lows, and do you see we are trending anywhere? No, we are like we are bouncing from highs and lows, bouncing from highs and lows. Like this is a dream for a support and resistance trader, but as a continuation trader, you're sitting here like, damn, like, okay, we're obviously not continuing anywhere. We're not trending anywhere, so this sucks, right? So when we're in a range, you do not want to trade because what happens when we range? We edge highs, we edge lows, and we do not follow through because while we are not trending to any type of external drawn liquidity, right? Like, yes, you could have caught in a short to London lows, but after we boom, take out draws on opposing side of the market, then and you see us trade back into that range. Now it's like, okay, what's the point, right? So number 3 is ranging, and pretty much number 4 is kind of the same thing as number 1, just not confirmed drawn liquidity because you could see overall we're trending to, let's say, an area in price, but like let's say we are still rejecting this area, right? Like we have boom, literally equal lows down here. Let's say you want to catch a short, but we are still trading in this zone of rejection. Like I said in the drawn liquidity video, right? You are not able to short until we confirm to the next drawn liquidity, right? So conditions, just trading when we don't have a confirmed drawn liquidity yet, and that was like the first video I post, right? Like I pretty much told you guys how to go about it. Literally just sit on your hands and wait until we break out and start trending to a draw. It would look like this, right? Boom, boom, boom. Cool. Number 5 is not trending, right? And that's literally the same thing as a range. It's literally the same. Like it. Look, you see, boom, trending market, not trending market. It's blatantly that simple, right? If you see we are just bouncing from highs and lows, we are obviously not in a trending market, right? So as a continuation trader, you are looking to capitalize on the expansion move because right, like it's like you're not catching a reversal, you are catching the expansion to the next objective where price wants to go, the next draw on liquidity, right? So if we are not expanding anywhere, why are you sitting here trying to force a trade? What are you doing, man? What are you doing? Um, and number 5 is no retracement leg, right? Because again, this is all things you guys pretty much have learned in the past video, I would say, in the past few videos. But like no retracement leg, right? And what no retracement looks like pretty much just looks like this, right? A straight leg of price up that does not give any pullbacks whatsoever. This looks like because right, if you were to enter any trade within here, like I've said in previous videos, you would obviously be very vulnerable to get retraced on, right? So if price is everything's checking off the box, but you don't get a retracement, then just don't enter the trade, bro. Simple as that. Simple as that, bruv. So let me just show you a few examples of losing trades and pretty much a few examples of these conditions. And then, of course, I'll get to backtesting and show you guys what it looks like in real time and me kind of pointing things out in real time. So, again, like today is literally a pitch perfect example, right? Because what do you see here? Boom. We take out highs, we take out lows, and we are trading back into this range, right? Ideally, if I were sitting here looking to take a trade on this day, which I'm not because it's the day after Christmas, and we're winding down to a new year, but right, if I were looking to catch a trade on this day, this is how I would approach it, right? Like, okay, I'm aware we took out session highs pre-market, dang, and we just took out session lows going to market open. So how am I gonna play it, right? So like, let's say price is right here. Pretty much, what am I gonna wait for? I am simply just going to sit on my hands and say, okay, if we continue displacing lower, then boom, I am willing to target these equal lows down here. But the second we start trading back up into this range is the second I am off for the day. Because why am I off, right? It's playing into those conditions that I said do not trade. No draw on liquidity. Like if you're trading back to the upside, we already took out session highs. Low volume. Does not look like a lot of volume here. Not a single gap credit on the 5-minute time frame. Ranging, yes, we are in a range. We just took out the session highs, session lows, and we are bouncing in between highs and lows. We are in a range. Not confirmed draw liquidity, right? Like if you're gonna trade higher, let's see what the next draw liquidity is. All the way up here, G, all the way up there. So again, like this is not a proper draw on liquidity. That's not a strong draw on liquidity. So we have not confirmed the next draw on liquidity yet. Not trending. No, we're not. We're literally moving sideways as we speak. And no retracement. And in order to look for a retracement, all of those boxes need to be checked off first and foremost. So I want to show you guys an example of a losing trade that while I was getting this video prepared, I literally showed my students and said this, I feel like I can literally just see price as it's playing out and be like, okay, I know this is not going to play out, and this was a perfect example, right? So you see here, so I like to call it a pattern trade, right? You guys have probably heard the term pattern trade, and it is simply just taking a pattern of the system you trade, right? And this was a beautiful example. I'm just going to go in replay mode just so it looks a little bit better for you guys, but let me exit here. Oops. So you guys see this, right? Boom. Like this is essentially your A plus continuation. The flip out of the retracement is invalidating the retracement. Like, oh my gosh, perfect. Let me execute this trade, right? We have like those equal lows down here. Like this is perfect, right? So by looking at this pattern in price, it is a very clean trade, right? You get that retracement leg, and you're entering off pure displacement to the quote unquote drawn liquidity lower, so you think. But what happens here, right? So what are you seeing? Boom. What do you like? What did you learn in the first video? The first video is okay. I'm not going to short to the next drawn liquidity until we have displaced below this area in price. Why? Because we keep rejecting it, right? So pretty much what did I notice is like, okay, so I'm not even going to look towards shorts until we get a closure like this below this low, right? So boom. And what do you see? And what do you see exactly happening with this trade is it gets stopped out. You see, boom, stopped out, right? So what, like, again, it literally looks the exact same time. It looks the exact, it's like a pattern you can recognize, right? If you are able to sit on your hands and say, okay, I see we have took out this draw, and I'm going to sit here like this until we break below it. It is simple as that, right? So if you are able to recognize these things over and over again by journaling and just noticing them within your head, right, it gets so much easier, right? Like, boom, like literally immediately stopped out. And right, like, because you might be looking at this chart on the 1 minute time frame, and if you were to put your hand over everything that happened to the left, yeah, it looks like an A plus trade. But right, you need to take into account everything that's going on in higher time frames, lower time frames, drawing liquidity, right? Like, because boom, like look on the 5 minute here, you just see we are blatantly just bouncing between highs and lows. We are ranging and consolidating in price. We have not confirmed the next draw on liquidity, right? So the best thing you can do to be good at recognizing these conditions is just staying on the 5 and 15 minute time frame, right? Just stay on the 5 and 15 minute time frame so you don't get caught up in pattern trades in the 1 minute like this, right? Because there was literally an example like this last Friday as well. Like boom, we have a plus quote unquote short where the candle sequence looks beautiful, but you're not taking into account everything that's happening to the left, right? We already took out draws lower, and boom, you just get a fake out displacement candle like this, and you get stopped out, right? So if you just enter on the purely mechanical system and don't alter in these kind of conditions and saying, okay, yeah, this looks good just looking at the candles, but I'm aware we already took out the draw on liquidity and we have not confirmed the next draw on liquidity yet. Volume is a bit slow, so I'm just going to wait until those conditions play into my favor. Then that is when I'll look to execute a trade, right? So that is pretty much the biggest thing. Like this was just an example, right? You see, boom, we immediately reject London lows. And like what did I say? If you're shorting in an area that we have like aggressively rejected, then it is always more vulnerable to get stopped out because this is a point of reversal and a point where we could reverse in the markets, right? And that is exactly what you saw here. Boom, this got stopped out, this got stopped out, right? So please just wait until we confirm for the next draw on liquidity. You have a draw on liquidity, we have volume in the markets, we're not moving sideways, and we are actually expanding in the markets like this and whatnot. But yeah, it'll be much easier for you guys once I'm doing it in live time and back testing. So let me just hop over to FX replay. All right, now going to be back testing a few days just to show you guys literally my exact thought process as it plays out. Like, oh my gosh, this condition, oh my gosh, oh my gosh, oh my gosh. Literally just going to be talking my exact thought process as the markets play out. So let's get into it. Not going to waste your time here, but I am doing July of this year. So let's get straight into it. And again, literally just going to be walking you through my exact thought process, what conditions are playing out, what I like, what I don't like, and overall be a very educational next 10 or 15 minutes here of me watching price. So pretty much what I'm seeing on the 4-hour going into today is we're overall bearish, but not really a ton of draws to the downside. Boom, we have this hourly low. And can I switch time frames? Okay, so boom, we have this 4-hour low down there. Looks like we already swept out pretty much these 4-hour lows right there and got a pretty strong reaction off it. So I'm not really going to want to target this low down here because what have I literally said like 5 minutes ago? I do not want to target a draw on liquidity that and I don't want to place a trade in an area that we have been rejecting, right? So I'm literally, if we do target this low, I'm going to wait for a displacement and confirmation to that draw lower. So pretty much I'm actually relatively bullish going into today. Just seeing what draws we have higher. Not really a ton, but probably session highs of some sort, something like this. If we are going to displace higher on the day, then that is probably where we're going to go. So I'm just going to start playing open and see where we start displacing towards. Okay. Bang. Retrace, 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 retrace. Damn. No entry there, and I guess that is a condition where we don't really get a proper retracement, right? Because being honest, I don't really see a retracement leg in this move up that I would have full conviction in not getting kind of retraced down and not getting stopped out, right? Because the main thing is being able to have full conviction that price is not going to go down to that internal low we put in the retracement leg. And do I see any strong displacement here? No. Like what do you see, right? Every single candle looks the exact same. Every single candle looks the exact same, and that doesn't really give me something to kind of like pretty much give me conviction and kind of differentiate. Oh my gosh, differentiate. Yo, come on, guys. But tell the difference between candles and which ones are going to propel price. Oh my gosh, propel price to the draw on liquidity. Jeez, man. So when candles don't look the same, then, I mean, when the candles all look the same, then, right, that's probably your sign to say, okay, we obviously do not have the most volume in the markets and not really something that I have conviction in longing to that draw because price could do this, right? You see this candle, oh, this is a good candle, then boom, we actually put in the retracement leg and then you get your entry with volume, right? So it's never really worth it for me and whatnot. That was actually embarrassing. That English there was embarrassing, but I'm going to go to the next day. I got to try that one more time while I go to the next day. Differentiate. Differentiate. Yo, I'm cooked, bro. I'm cooked. Oh my gosh. But all right, let's go to the next day. Is this all-time highs? Jeez. Okay, wow. We're already at all-time highs. So I guess you guys will get a little bit of all-time high knowledge as well as I speak. The assets are pretty bullish. So pretty much we are literally at all-time highs right now. So okay, we do have a data low here. We do have a data low. But I guess we'll see what we do. If we continue displacing higher off open, then I'm literally just going to look for a retracement and flip to target higher, and if not, then possibly get a short to data low. Alright, alright. Alright, yeah, I'm going to take this long right here. I'll go into exactly why I took the long as it plays out or doesn't play out. Bang. Bang. Bang, bang, bang. Place order. Bang. Alright, let's see. Break even. And tomorrow you guys will learn about my break-even system, why I go break-even, and everything. But let's see if this plays out. Nice. Okay, so reasoning why I took this trade, right? So pretty much, like you guys see, overall we are very, very, very bullish going in today. Every single time frame is bullish. We are expanding. But what do you notice, right? We are at all-time highs, and when we're at all-time highs, there is no overall draw on liquidity higher, right? So, but like I'm pretty sure gold and silver and this are in this exact point right now. When we have price expansion, price like literally just only long, only long, only long, only long, right? So pretty much the second we started trading higher off market open and we did not go down to these data low is the second that I was like, all right, I just want to catch an expansion long, right? So pretty much, what do you see? You guys pretty much learned it in the entry model video yesterday, right? What do you see? Boom, retracement to, do we rebalance a 5 minute? Retracement to a 5 minute gap in price, boom, and pretty much, okay, we rebalanced that leg. Now I just need something that is going to convince me that's going to propel price higher, right? So what do you see? Boom, we start flipping here. We give a wick into the pretty much only gap that is going to push price higher, and then boom, you see the displacement, right? So what do you see with this candle? That pretty much, I'm gonna try one more time. Differentiates, fucking hell, from the retrace sequence, right? It is much stronger. It is pretty much right. Like looking at this, like genuinely telling me, like sit down and spend 5 seconds, right? After seeing that bullish candle displacement there, would you have conviction that that candle is going to push price higher to bare minimum go to the internal high and then overall push prior to expand because it is all-time highs. There's no draw on liquidity, but overall push price higher to expand. In my opinion, yeah, right, because that is like how you should look at it, right? Like it's not really a mechanical system. It's just saying, okay, do I really have belief? Do I have conviction that this candle with this volume coming from this candle is going to continue with that exact volume to said objective in price. In this case scenario, it was price expansion, literally just targeting thin air. But I'll get into explaining that in tomorrow's the last video of the series, which is trade management, right? But what do you see here? Boom. This displacement candle overall gives me conviction that we are going to continue the trend. Boom. And like it sounds so stupid. It sounds so simple because it's literally just waiting for retracement and flip. But like if you are able to only enter when conditions are in your favor, right? Like boom, obviously trending market, overall displacement, volume in the markets. Like these conditions are in my favor. So if you're able to filter out the days where we are simply just moving sideways, your win rate will be insanely higher. Right? Like what gave me conviction taking this trade? I realized that all probabilities, all the conditions that I listed in the first clip were in my favor. Trending market, volume, displacement, retracement, flip, like everything's in my favor, right? So if you're able to filter out the days and just sit on your hands and be able to not take a trade when these conditions are not in your favor, your win rate will be dramatically higher. So that's the reason why I took this trade, and I'll get into trade management tomorrow on pretty much why and how I go break even and whatnot, but that'll be tomorrow's video. So let me just do like a few more days and try to show you guys a few more examples. But as you can see here, right, boom, like literally, like you can just look. Probable conditions, we are moving in a straight line, and genuinely, guys, oh my gosh, genuinely, you can literally just go. This is like 2-year-old knowledge. You can literally go on the line chart. Sun, ready? Boom. Like, look at this. Look at this. Probable conditions. I mean, non-probable conditions right here. What do you see? It looks like a 2-year-old scribbling on the charts. When you see a 2-year-old scribble and price moving sideways and consolidating with low volume, that is what low probability conditions look like. And what do you see when conditions are in your favor and everything plays out? Boom, expansion leg. Boom, expansion leg. So if you're able to filter out when price looks like a scribble, looks like pubes going sideways and consolidating, your win rate will go through the roof, right? So like literally just pair moving market with volume to a draw on liquidity and wait until we break out and confirm to that draw, bro, like your win rate is gonna be through the fucking roof. It is generally like the simplest shit of all time. But let me go to the next day and do like one more example. So what am I saying here, right? Low volume. Is this even market open? Yeah. Okay. Low volume. Overall draw on liquidity is not too prominent in my opinion. We have a 4-hour low down here that we can possibly target, but overall what I'm seeing right now is low volume and overall not that too strong of a day overall. Like I'm pretty bearish going into today, but we do have an untapped 4-hour gap above and then pretty much this 4-hour low down here. So I'm just going to wait out my hands and wait until we start displacing towards either or. Simple as that, yo. Simple as that, yo. Because as you can see, low volume, trading sideways. Not something I want to participate in. So let me wait until I see something that I want to participate in. Nope. Moving sideways, low volume. No, 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 no. No, 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 no. No, 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 no. Son, I'm crying. Son, I'm crying. Low volume. Next day. If you're able to filter out these days out, do you really think you are not going to be profitable? If you are able to filter out the days where conditions are not in your favor, do you really believe you are going to be down on the month? I don't believe so. If you can simply execute and sit on your hands when conditions are not in your favor, you will fucking crush, bro. You will crush it. Oh my goodness, man. But let me go to the next day because that was like that used to be my biggest issue. I would obviously take the winning trades because they were easy to catch, but I cannot stay out of the losing trades. I cannot stay out of the losing trades. So like it is so important, man. It is so important. See, the 4 hour looks pretty cooked here, pretty cooked. But overall, we do have an hourly low, and multiple hourly lows. So overall, I'm leaning bearish going into market open. We already swept out an hourly high and are displacing lower. So I want to short that shit. I want to short that shit. But yeah, so equal lows here, stacked lows, overall rejecting highs. Pretty bearish market structure. I'm gonna look to short. Fucking hell, mate. Okay, I was right. I was always right, but no entry there. Happened pretty quickly, but let's see if we possibly get one to these lows down here. Probably not, just because it's relatively close. Bang. Yep. Pretty cooked. Pretty cooked. Pretty cooked. Pretty cooked. There we go. There she go. There he go. Alright, I'm going to the next day. I just want to give one more good example for you guys, but yeah, I mean, looking at this, conditions wise, what do you realize? Okay, volume not there, trending not there, drawn liquidity it was there, but again, not something I want to participate in. I am not going to give back my capital to these types of days in the market. That is not something that is in my interest because I like keeping my capital and executing my capital on winning trades and probable days, right? Duh! Duh! Holy shit, the hourly looks cooked here. Alright, I'm gonna give one more example and try to just get one more trade in because I don't want to make this video too long. But what do you see here? Literal chopped shit. Chopped shit going into the day. But I'm overall going to be open to taking a trade because we just could start expanding out of nowhere. So who knows? But these are the draws higher. Draws lower are down here, but overall, yep, relatively. I'm not lenient towards anything. Like anything could happen here. We're literally moving sideways, so I'm going to mark out lows as well. And let's see what the big New York Open has in store for us. The big NY Open has longs, shorts, longs, shorts, shorts. Okay, looks like we have shorts maybe. Nope. Nope. This is what a range looks like, fellas. This is what a range looks like. It's bouncing up and down, rejecting highs, rejecting lows, rejecting highs, rejecting lows. And what happens when you trade in a range? You get caught up in this bullshit. You get caught up. Is my chart lagging? What are we doing? You get caught up in this BS. You get caught up in it. So my chart is literally lagging right now. So I'm gonna end the. Wait, never mind. But look, right? You see, like if you want to catch shorts, boom, we reject you low. Okay, so why are you going to want to take another short down to that area in price if we have a hard rejection in price, right? What does that hard rejection signify to you? Is that okay, we are obviously not delivering swiftly. We are ranging. We are bouncing between highs and lows. So that means we are not trending and we are not delivering cleanly to that draw liquidity. So I'm not gonna take a fucking trade to it. Alright? Alright. Capiche, capiche, capiche. Let's see if we do deliver though. Nah, fuck that, because my point is proven right. You're in a range, and we do not deliver cleanly when we are bouncing up and down, up and down, up and down. That is for support and resistance traders. So, my goodness, man. But pretty much the main takeaways with this video is when we have low volume, no gaps being created, no draw on liquidity. We have not confirmed the draw on liquidity. We are in a range. We are not trending. We are rejecting highs and rejecting lows. These are conditions that do not play in a continuation trader's favor. So if you're able to navigate the markets and sit on your hands when these conditions are playing out, your win rate will go where? Through the freaking roof, yo. Like I see your win rate blasting through my roof right now. That is gonna be you if you're able to navigate these conditions. So hopefully you guys enjoyed this video. Let me make this drone a little bit bigger. But hope you guys enjoyed this. Hope you guys are learning a lot in this series thus far. Tomorrow's video is going to be trade management. So when you're in a trade, how to manage that trade, break even, take profit, where to place your stop loss, etc. That's going to be tomorrow's video. Very important as well. But hopefully you guys like this. Hope you guys are learning something. And that's pretty much my condition video. So if you do want to learn from me one-on-one, I do mentor. You can apply in the description. If you want to get accounts with Alpha Futures, code Jack will get you a discount on those accounts. And then my TikTok, Instagram, and of course, subscribe. I'm trying to grow. Subscribe, please, and I'll see you guys in tomorrow's video.